I think over the last years and probably the last decade, we've seen this kind of race to the bottom among developers of wind energy in terms of cutting costs and making it more cost competitive. I think we've seen that in a bigger sense in the offshore wind space, where costs have been much higher than the onshore renewables. And the cost cuts that we've seen in the previous decade has definitely been driven by the larger turbines. So that has, first of all, kind of been creating this kind of race to the bottom, driven by new technology developments on the turbine side. So the turbine manufacturers have been very focused on R&D. It has been an R&D race among themselves, if you will, and that has also caused a lot of investments. Now, at the same time, we had the global pandemic, which led to a lot of supply chain disruptions, and then the rebooting of the economy after the pandemic started to kind of trickle down, and we've seen that caused a lot of inflationary pressure across the supply chain. Now, for a lot of these turbine manufacturers, they had already locked in orders, contracts where the price were already set, but the input prices skyrocketed in terms of cost, and that has led to lower margins, losses, and so forth. Now, in addition, we're still seeing that there might be some signs of improvement, but we are still seeing that these R&D efforts, especially on the offshore wind side, will continue as the size race is increasing, and that will also cause new investments to be made. But because of the very, very kind of accelerated nature that these new R&D efforts need to be done, they're not really making enough money on their kind of expansions, investments into new models.
But is 2023 panning out to be any different for these upstream players? Will these losses be reversed, do you think, Alex?
With time, I think we saw at the end of last year some signs of improvements on the financials among these turbine OEMs. We are now seeing that a lot of these locked-in contracts that they were struggling with from before has kind of expired, and now they can actually, let's say, offload a little bit of that cost pressure onto the developers. But there's still this R&D race. And we're also seeing some worrying signs of higher kind of warranty claims among the turbine OEMs, which is also natural when you move very fast into bigger turbine models that haven't necessarily been tested all that much. And we've seen new reports coming out of the larger turbine models having a little bit higher issues and so forth. So the jury is still out, but we are seeing some positive signs, and we also expect inflation to be reduced, especially in 2024.
The expected reconfiguration of supply chains taking place today in light of an effort to decrease dependency on China, how might that impact the wind industry in the short to medium term?
Yeah, I think when we talk about kind of reconfiguration of the supply chain, we're typically talking about this trilemma between reliability, affordability, and sustainability. And if you are going to, let's say, reduce your dependency on one sole country or reconfigure it to be more reliable for that, which is the focus of Europe now, for example, it will come at the cost of lower affordability, meaning that the cost probably will come up a little bit in the short to medium term. New expansions will be needed. We will need to see new investments being made, and that can also prove costly. We know that a lot of the components that are coming out from China are comparably cheaper than what has been made, for example, in Europe. But it also comes down to the priority of the policymakers, for example. When we talk about Europe now that tries to kind of reduce its dependency on Russian gas, at the same time trying to reduce its dependency on China in terms of the supply chain, policymakers might need to make somewhat of a choice between reaching ambitious capacity targets and basically having a made in Europe supply chain.
Alex, let's talk a little bit more about policymakers, because across Europe, a cumulative 80 gigawatts in wind energy projects are currently stuck in different permitting stages. And this is compared with 190 gigawatts in operation. So it's a big, significant chunk. Why has this process been such a drag on the wind industry for the past few years, despite the renewable targets set by government officials?
I think you mentioned it there. The capacity targets have been set, but it's quite easy to set ambitious targets, and it's easy to kind of talk the talk. But I think the industry now understands that it's time to walk the walk as well. And in the next couple of years, we'll probably see a lot of much more very dedicated efforts by politicians to actually deliver on these targets. Now, we see that now that there are much more talk about concrete measures in order to strengthen the supply chain, shortening permitting times, and debottlenecking it. New targets have led to new areas being made available for the wind industry. It's been getting an influx of capital and new developers wanting to develop their projects. But at the same time, it takes a little bit of time to kind of streamline those permitting processes. But we're seeing some improvements here as well. And now with the Green Deal industrial plan in Europe, among others, we're seeing some very concrete measures in terms of speeding up some of these permitting processes.
Talking about those big plans that you've just mentioned, what are the specific aspects in these plans recently announced, whether the Inflation Reduction Act in the US or the Repower EU in the EU, that pertain directly or indirectly to the wind industry?
Yeah, so to start with the Inflation Reduction Act in the US, that lists several things that are very positive for the wind industry. A kind of a continuation of the tax credits that will affect the economics of projects and make developers eager to kind of get started on those projects. We think that will have quite a strong impact on the onshore wind market in the US. Not so much on the offshore wind. It's in isolation a positive, but we also do see other supply chain issues there, which will make offshore wind take a little bit longer time. And also the fact that there are specific credits for the manufacturing of components into the kind of the clean energy space, which also will speed up the domestic supply chain in order to support this capacity build out. For Repower EU, in a way, the specifics have been a little bit less, or it has been a little bit less specific towards the wind industry. It sets a 45% share of renewable energy in the power mix. It sets a clear capacity target for solar, but we know that it will also lead to increased investments and capacity expansion in the wind industry. Now, you kind of following the Repower EU was the Green Deal Industrial Plan, which had the Net Zero Industry Act, the Critical Raw Materials Act, and those acts have been very specific in terms of shortening permitting time, prioritizing key manufacturing projects, building out the correct and the most critical and strategically right projects, as well as kind of focusing on the supply chain, but a little bit less concrete in actually kind of supporting that supply chain expansion that is needed in Europe.
What is your outlook at Rystad for the wind energy deployment over the next 5 years, say until 2027? And how would those numbers translate into the different markets from a geographical perspective and from a technology perspective as well, whether it'll be onshore or offshore?
So I think our base case towards 2027 is, we just surpassed around a terawatt of capacity for wind globally. We expect that to reach around 1.6 terawatts by 2027. So that is a 60% increase from 2023. At the same time, we see that offshore wind is definitely the fastest growing because of it's coming from a quite low base, around 60 gigawatts at the end of last year. So it's very small compared to the onshore wind market, but it is going to grow very rapidly towards 2027. Now, when you talk about different geographies, the three main engines will be Asia, driven by China, Europe, and primarily North America, driven by the US. For the US, it's mostly onshore wind, as we do expect it to take time with offshore wind, as I mentioned. For Europe, it is both onshore wind, but to a larger extent offshore wind in terms of the share of capacity deployment. And also in China, we see a lot of both onshore and offshore wind, following those very kind of supportive structures with the feed-in tariffs that were phased out for onshore wind in 2020 and offshore wind in 2021. Still see quite healthy activity levels in China.
What's the latest update, Alex, on the costs associated with offshore wind power in particular? Any signs of further decline rates? Have we plateaued? Are we expecting further declines in costs?
We are, but it has stagnated a little bit. I think what we've seen is a very strong cost reduction over the last decade. Which is kind of flattened out now that and even increased in some regions and for some projects due to the inflationary pressure that we have been seeing. But as we see with the turbine OEMs, they show no signs of kind of stopping at the current turbine size models. That will continue. So we do expect that cost will come down as the inflationary pressure kind of slows or cools down, if you will. At the same time, we're also expecting transmission to be more kind of more hybrid systems where several projects can be combined into the same kind of transmission project and so forth, which can further cut costs. So a little bit, medium to long term, we can still expect to see further cost cuts. It should be mentioned that the increased sizes that are driving these cost reductions will of course lead to increased investments in the kind of, let's say, the adjacent parts of the value chain. So there is a limit also to how big these components can get before actually the costs become higher again. So a plateau is probably within sight, but we still expect further declines.
Alex Florte, VP and Product Manager of Offshore Wind at Rystad Energy. Thank you so much for coming on the show. Thanks.
Thank you for having me.